Alright, welcome traders. So I'm going to be teaching you about trading strategies today, and I decided to talk about it because most traders do not know what they are doing. Okay, a lot of traders you meet, they do not understand how this market thing actually works. They don't really understand, they don't get it. Okay, so I'm going to be breaking it down today. See, most people tell you that there are 1,001 strategies in trading, which is true. Okay, but what if I told you that all of these strategies you are talking about are all under one of these three things which I'm going to talk about today? So stay with me to the end of this video. Okay, so the first one is the one that have high win rates with low risk to reward. The second one has low win rates with high risk to reward. When I say high risk to reward, meaning the true rates are mostly very, very controlled. I'm going to explain. Why the third one is the moderate type of rate. Okay, the moderate rate. So just to write here, higher rates with low risk to reward, then lower rates with high risk to reward, and the moderate type of strategy. Okay, now why is this thing important? It's because you have to understand what you are dealing with so that you can actually choose your pain well. The truth is, in trading, there is no strategy that is 100%. Okay, you just have to look at it in general and then look at, okay, which of these is going to give me more edge depending on my personality, depending on my capital, and depending on the type of trader I am. Okay, these are the things that determine what your trading strategy or what type of strategy you should be using. Okay, your capital, your kind of person, kind of person you are as an individual, and the time frame you use to trade. These are the things that determine kind of strategy you should be using. Okay, now why is it important? Because there's no strategy that is 100%. No matter what, each of the trading strategy you see today, each of them have their downfall. Just that most times your forex mentors and brokers only show you the good part. Okay, but everything revolves around this three: the high win rate with low risk to reward, low win rate with high risk to reward, and the moderate. Okay, so this high win rate with low risk to reward, what does that actually mean? It means that this market can win 90% of the time. Okay, meaning most likely out of 10 trades, you can win 9 and lose only 1. But that 1 you are going to lose, which is the low risk to reward, could actually wipe out your 9 successes. Do you understand me now? That 1 you lose could wipe out everything you have been trading for the month. So that's why I will call it the high win rate, because in trading everything is balanced. It's just a game of probability. It's just a game of probability, and the probability is balanced. Okay, if you have a dice, let's say a dice that have 10 parts, I want to roll it, and you pick a number. Let's say I pick a number. Let's say the number I pick, the dice has 10 parts. Okay, and the number I pick is I want to roll. I want to get 2. Okay, the chance of me getting 2 out of 10 is 1 over 10. Okay, that's the probability. That's the game. Are you getting me? That is the game. But if I reverse and I said, okay, I want to get any number between 1 and 9, the chance of me getting that is 9 over 10. So that is 90%. So if we are betting on that, out of 20, maybe even 20 rows, okay, I might be getting my number between 1 and 9. I might be really, really, really lucky to get my number between 1 and 9. Okay, but when I eventually get that one will clear out everything I will do. So the market is actually programmed like that. Okay, it's programmed. You can't cheat it. You just have to look at it and understand, okay, this is what I'm doing, then you choose your pain wisely. Okay, now this high win rate with low risk to reward is mostly what you see with scalping. Okay, scalping is a situation where, of course, you use a high lot size, right? So you enter the market, you grab something quickly, you grab profit quickly. Okay, you enter, you are just looking for maybe 5 pips. You can actually easily get 5 pips in the market. Okay, you enter, you just get to 5 pips quickly, and that 5 pips could be $5,000 depending on the loss and the capital you are using. Do you understand? So you get that and you chill. Okay, you've paid your bills for the month, you paid your bills for probably the week or so. Okay, you come back again, you do it. You can actually do that, and you might actually win for 6, 9 consecutive times, right? But the day you are going to enter and that market reverse against you, let's say you just enter to get your $5,000 like you usually do, and the market just start reversing against you that day, you could actually clear out everything you have made all through. So that is what this actually happens. So you see this in scalping, you see this in martingale system. Okay, so market is going up, you buy a market here, and the market start going down, you buy again, okay, with a higher lot size, the market still start going down, you buy again with even a higher lot size. Okay, why? Because you want to just catch when this market just move up a little, it's going to cover all your losses here and you don't even put you in profit. So we call that martingale. Okay, so you see that most times you're going to actually win most of your trade because the market moves in waves. The market moves in waves, right? It doesn't just go straight. So if you buy here and the market is still attempting to come down and you buy again, the market is still attempting to go down, you also buy the dip with higher lot sizes. Any small move here could actually cover the losses you'll be making from here and even put you in profit. And you cannot exit your trade here and still go back in profit, go home smiling. Okay, so it's part of the whole high win rate but with low risk. Why? Because if you enter this market here now and the market still start falling and you enter again, remember you'll be accumulating your losses, your losses are getting bigger and bigger. If this market eventually do not return, you're gone. Okay, everything you've been doing since you were born, this is enter trading, is lost. So that is that. So what am I saying? I'm not saying this so that you shouldn't scalp again or so that you shouldn't use your martingale strategy or anything you do. I'm saying so that you actually understand what you're actually doing. Okay, so you look for how to make it work in your favor, either by reducing your trade frequency or by looking for a premium setup where you can do that stuff you are doing or do that stuff you do. Okay, yeah. So, but remember, nothing is 100% in trading. So that is for that. So that is for the high win rate with low risk to reward. But the second one is low win rate with high risk to reward. Now, what this means is you basically accumulate a lot of losses. Okay, a lot of losses. You see, this is mostly people that trend traders, right? Trend trader, because most time when you are trading trend, you are trying to enter maybe another block or a zone you're trying to enter here. Most times it take you out and go up, but sometimes you enter, it goes up, take you out. Okay, you see that you actually have more losses. Okay, more losses. But the good thing is the day you eventually catch that trade, okay, when you catch the trade, you are lucky enough to catch the trade, you can start to hold that trade till maybe next 2 years. Okay, if something if they come back. Okay, so you see that you accumulate a lot of small losses, but then once you get the opportunity, you actually cover up all your losses and even get yourself in profit. Okay, so the problem with this is that it is not easy psychologically. Okay, you cannot bear seeing 10 consecutive losses, 15 consecutive losses. You start doubting yourself as a trader. Okay, you start like, what am I doing wrong? You understand me? So that is the problem with that. But the first one is easier psychologically. You are happy because you are winning. You are getting your dopamine rush daily until that one sweep everything off. So this is just the major difference between them. Okay, so which one is better? I don't know. It depends on you. Choose your pain, right? So that is that. But well, maybe at the end I'll tell you personally the one I would actually choose. But the third one is the moderate. Now, what does this moderate mean? Now, this moderate is you are actually looking at a controlled risk in the sense that you are looking at something that work 50-50 or 60-40. Okay, you're just like, okay, this one is going to be giving me controlled losses, like what some people do when you talk about trading strategy. Some people have their different kind of setup. Okay, so people tell you that if Friday closes bearish, I wait for the next Monday candle. Okay, so if we're in an uptrend, Friday closes bearish, I wait for the next Monday candle to take out the low of the previous day before I can now buy. Okay, before I can now buy, the market go up. Why? Well, this works, right? It works. The only thing is that sometimes it might not work. Okay, but it's moderate. It's not going to give you 9 straight losses, and it's also not going to give you 9 straight wins. You can actually win 2 times and lose maybe once, or win 3 times and lose maybe once. Okay, this one is different from the high win rate and the low risk to reward, and low win rate and the high risk to reward. This is different. This is more like the moderate or the average. This is the moderate setup. Okay, now it depends on you. The difference between this one is that the growth curve is slow. Okay, your curve actually grows like this, very, 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 very slow. Okay, very slow. The curve for the high win rate with low risk to reward is basically like this until the loss. Okay, so it's everything. While the curve for the low win rate and high risk to reward is like this. Okay, so this basically, so it just depends on what you want. Why the curve for the moderate is basically like this. You understand? So this basically, these are the three major. So every strategy you see out there that people are teaching you, it fall under any of these three. Okay, so next time I teach you a strategy, let's say your mentor is teaching you a strategy, or you are looking at maybe any forest video is teaching you a strategy, try to understand, okay, this strategy this person is teaching me, which of this scenario criteria does it fall under? Okay, which of them does it fall under? Okay, and does it suit my personality? Is this something I could actually do? Is this something that will suit my psychology? Is this something that's going to suit my capital? Now, this scalping or the high win rate with low risk to reward is very suitable if you have very high capital, very good capital. Okay, if you have about, let's say, $500,000 now, and you are entering a trade with one lot size, you probably have no issue. Okay, you are entering a trade with one lot size and you are looking to just get 5 pips daily, you have no issue. Most of the times you're going to win your trade. Why? Because your balance is able to cover your loss. Even when the market starts trading against you, you can still hold and wait for it to come back for you to cover your loss. Are you getting me? So if you have a very good balance, of course you can do that. But if you have a low balance, let's say you are an average trader trading with maybe $1,000 or $500, $100, $50, whatever it is, well, the high win rate with low risk to reward would be good for you. Why? Because you might be able to grow that your $50 to $100 or $200, but one trade can actually take everything back to maybe $20, and that would be very, very, very detrimental to your psychology. Okay, so that is that. So you have to look at, okay, my capital, is it enough? If your capital is enough, of course, go for the high win rate. Now, for the second one, of course, for those that have moderate capital, okay, if you have $1,000 to trade or $500 to trade, you can use the low win rate with high risk to reward, meaning you have small controlled losses. Okay, that's basically what I do personally. I actually prefer it. I don't like scalping. I don't do scalping. I really don't like it. It doesn't suit my personality. I'm a long-term trader. So for me, I would advise you, well, do what I do. If you are like me, okay, do what I do. Even if I also have $1 billion or $500,000, okay, I'm still not going to scalp. I don't like scalping. I'm still going to have small controlled losses with massive win. Okay, so it depends on you, who you are as a person. So the third one is the moderate. Okay, now this moderate, the problem with it is that sometimes these strategies that they say to you or they tell you, sometimes they had hidden costs. Okay, it's not actually as promising as they say. Okay, since I've been trading, I think I've found just one strategy that did that for me, where I'm winning. Okay, I'm winning and I'm also losing almost concomitantly. Like it's happening almost together. Okay, eventually I got tired. Okay, I got tired. The wins were too small. Okay, you win today, maybe you win the next day, and the day after it you lose. Okay, and you come back with $15 net in a month. Okay, so that was too slow for me. Okay, like I said, it depends on your kind of person. So people are okay with that, but if I do that for 10 years, I'll probably have maybe $100 as profit. I'm kidding, but you get the point. Okay, so that one is actually very slow. So if you still want to do that, it depends on you. You can do it. Okay, you can do it with somebody that has $100. You can actually make 0.5 cents every day without any problem. Okay, but can you wait that long? Okay, I mean, it's going to take you about 30 days to make $15. Can you do that? So it depends on you, okay, and who you are as a person. But this is what I actually want you to do. Actually look at every strategy you are using and try to understand the hidden costs. Okay, no strategy is perfect in trading. There's no 100% trading strategy. That's what I can assure you. You can't see it. Okay, why? You can see a strategy that is 90%, which is good, but the hidden cost of it, that 10% could clear out everything. So you have to look at it, actually choose your pain. Okay, choose the one that suits you the most. Okay, so this is it for today, guys. And of course, before I end this, you could be a beginner here. I think it is improper for me to end the video without letting you know of this perfect opportunity which you have to actually learn trading. I have a training ebook where I teach people how to trade from the beginner to the expert section. I also have a mentorship program where you get to interact with me directly, okay, on how to trade. I teach you the trading setups I use, trading strategy I use, what I know from trading, okay. But then most importantly, this knowledge, everything I know about trading, have also been embedded into a trading ebook which I call the FSB Trading Trilogy. Okay, it comes in three: the beginner trader, intermediate trader, and the expert trader. This is basically everything I teach in trading, everything I know in trading, and this is the things that you need to know in trading. Forget all the noise, forget everything you are seeing on YouTube and all the stuff you are seeing. No, everything you need to be successful, to be profitable trade is already embedded in that book. Okay, so if you're here, you have not gotten it, I will actually advise you to actually get it. It's going to help you a lot, especially if you are a beginner or if you are an unprofitable trader. Okay, the different trading strategy I use is also there. It's also embedded in the book. So that is for that. So this is for today's video. And of course, if there's any question, if there's any comment, if there's anything you feel you should let me know, you can let me know in the comment section. Okay, and if you want to reach out to me directly for maybe mentorship or training ebook, you can also let me know in the comment section. I'm going to reach out to you and probably reply a message. All right, so this is for today's video, guys.